Welcome to Idea to IPO. Well, thanks for coming tonight. My name is Rob. I organize Idea to IPO. We've been holding events in Silicon Valley for many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 1 million members among all our meetup groups all around the world. We've organized, promoted, and produced over 5,200 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. We hold venture capital panels, legal workshops, networking events, and more. We hold an event every day of the week. Check out our schedule at ideatoipo.com. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the greater San Francisco Bay Area? Who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? Wow, we got like 10 today. Whether you're born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important though, because we know many entrepreneurs are struggling financially. So we make sure our events are free or affordable. And if one of our events has a cover charge and you cannot afford the cover charge for whatever reason, come talk to me and we can work something out. And at most of our speaker events, we make sure that we provide a delicious buffet. Is that a delicious buffet? I want to thank Snell and Wilmer for sponsoring that delicious buffet. So let's hear it for Snell and Wilmer. Applause. More importantly, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Besides that young lady and our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. Tonight, we're grateful to Snell and Wilmer for hosting us once again at this beautiful venue. Is this a beautiful venue? So let's hear for Snell and Wilmer. Let's hear for Snell and Wilmer. Applause. Roger, would you like to say a few words?
Absolutely. Well, first of all, how are you all doing? No, seriously, how are you doing? Excellent. Well, welcome. I really appreciate you all coming out tonight. Thank you. I'm looking forward to an amazing evening. We have to pay for dinner in case our COO or CEO sees the video. So I'm going to tell you a little bit about Snell and Wilmer. Law firm started in 1934, I think. And no, I wasn't a founder. If someone asked me if I was a founder. Obviously, I haven't aged well, but it's about 600 lawyers and 18 offices across the country. I head up our emerging growth and venture capital practice group. And so I deal with companies from inception all the way through IPO, but most common is an M&A exit. And before I became a lawyer, that was not for you instead. I was an entrepreneur for 10 years, so I've been where you've been, and it gives you a very different perspective having sat on the other side of the table. So thank you again for coming. Looking forward to an amazing panel event tonight. And thanks, Rob, for putting it together.
Applause. Some of our other partners are here tonight. I would like to also have them say a few words. Let's hear it for Ramana and Medbricks. Applause.
Thank you so much. He's a good guy from South Africa, other report. Thank you. Idea to IPO is a great meetup group. I've been attending for a long time. Thank you. So I have a podcast, a healthcare podcast. I interview doctors from around the world, and also here for major institutions like Stanford, John Hopkins, Harvard. A lot of doctors. My audience are doctors. So I provide anybody who's interested in testing market, for their medical device or service or goods, you just come and see me. Thank you so much.
Applause. Next up, we have Diana from Corporate Accelerator Forum. Applause.
Thank you. Corporate Accelerator Forum is an open innovation company. We help big companies partner with startups and other entities. And we've been doing it long enough that I think we figured it out. And I wrote a book. It's coming out in October, and it's called Open Innovation Works. You can find it at openinnovation.works. I'd love for you to get on our list and get early access. If you are corporate, I'd love to talk to you about open innovation and about AI adoption through hackathons for non-programmers. And if you're a startup, I'd love to talk to you about your pathway to corporate partnership. Thank you.
Next up, we have Melissa from Autodon. Applause.
Thank you. Hi, guys. I've got a table back over there. If you see the gold around the little poster, we've got a raffle going on. $25 Visa gift card. So if you haven't dropped your name, drop your name in there. And also, if there's anywhere where you need some tech support and help, we would love to collaborate and look for some synergy there. Thank you.
Yeah, so if you're looking to get funded tonight, someone will get funded tonight to the tune of $25. Though our local mission is to support entrepreneurs here in Silicon Valley, our global mission is to democratize entrepreneurship and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea to IPO. Go check it out. We have tons of videos there. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Our partner in this endeavor is Michael Payne, one of the top professional videographers in Silicon Valley. So let's hear it for Michael. Applause.
Applause. All right. Thank you. Wow, that wasn't very good, but yeah, you clap more for Rob, I see. But my name is Michael Payne. I produce video for companies and individuals. I help tell their stories, whether it's a customer story video, product video, a company overview. If you're interested in picking my brain or what I have to offer for you, please reach out to me. Thank you.
Okay, let's see who's in the room tonight. Who is an early stage entrepreneur? Who is an investor? Who is a government employee or an enterprise employee? Who's a former government employee? Who is a student or academic? Who's a journalist or a media person? Who's here for the delicious buffet? Well, thank you for coming. So here's the schedule for the rest of the evening. Our panel will hold a brilliant, compelling, dynamic, entertaining, and scintillating discussion, right, Pam? At 8 p.m., we'll open it up to questions from the audience. That'll take us to 8:30 p.m. We'll end the program. You can stick around, network, socialize, connect. There will be an after party. More on that later. So without further ado, I'm going to hand it off to our distinguished moderator, Roger Rappaport, partner at Snell & Wimmer. So let's hear it for Roger and our panel. Applause.
Thank you, Rob. Thank you. Just before I forget, I forgot to mention this. On your chair, there's a flyer. It's got a couple of programs coming up that we host. The next workshop is next week. It's on the 12th. It's developing a funding strategy. If you're an entrepreneur in the room and you're looking for money, it is absolutely crucial to have an appropriate funding strategy. It's a 4-hour workshop, but it's people have said it's really valuable. And on the other side, the AI Collective, we've just started. It's a peer-to-peer moderator group of 20 to 30 AI CEOs. We meet monthly, 4 hours, second Wednesday of every month. It's by invitation. We've got 20 CEOs from in the first meeting last week, and we're looking for 5 more CEOs. We've still got about 20 interviews to do, but if you're interested, you're an AI company, up to Series B funding, please apply. So, welcome, panelists. Really appreciate you coming and giving of your time. We know that is your most precious commodity. I'm just going to introduce the panel, and then we'll go around. If you could just tell us a little bit about yourself, a little bit about your fund, what you invest in, check size, stage, just all the good stuff. So why don't we start with you, Preetha Ram, Managing Director of Pier 70 Ventures.
Thanks so much. So I'm Preetha Ram. I'm the managing director of Pier 70 Ventures. So you asked me earlier how I got here, and really briefly, it's kind of a convoluted way. And I think most VCs, they arrive in their own separate, distinct, unique ways. And so mine's no different to that. I started out as a scientist. I have a PhD from Yale, chemistry, was academic, did that. And then I was the dean for science at Emory, at which time I decided, gee, I got to do a startup. So I did that, shifted gears, left Emory, came over here to do my startup, took it to an exit, and that was the next phase in my life. But that gave me a lot of operator experience, as well as a lot of deep, deep sympathy for the startups, the entrepreneurs, the CEOs, the journey. And then I had my company, I had an exit, and then I decided that what I could really do was to go back and help other entrepreneurs like myself. And what better way to do that than as a VC? So anyway, my fund, Pier 70 Ventures, the Impact Fund, which is fund one of it, we invest in health, but pretty broadly. We invest in what we call the 3Ds, drugs, digital, and devices. We've made about, maybe 12-ish, 12, there's no ish, 12 investments. And from seed to B, we're never the first money in. We usually follow on either angels or sometimes, friends and family. We obviously, it depends on the check depends upon where you are. It ranges anywhere from $250K to about $1 million, maybe a little more depending upon the deal. Always happy to talk to folks, and you can find me through my LinkedIn.
Good. Do people think you were crazy going from dean to
Yes.
startup entrepreneur?
Yes. Very crazy. Because you have to give up. Yeah, that's a long story.
Excellent. Well, next up is Jordan. I think he probably doesn't need any introduction, but Jordan Waber, managing partner of the SV Venture Group. Great to see you again, Jordan. And please tell the audience a little bit about your background.
I'm here because Robert asked me to be here.
And Roger as well.
No, Rob did. So thank you for being here. Thank you, Roger. It's always a pleasure to be here. I'm Jordan Wabe with Silicon Valley Venture Group, also a partner with a group called Network VC. We invest in Series A and Pre-A. Presently, we have 65 companies in Series A. We also have 2 funds. One invests in the Y Combinator companies. We deployed $7 million not too long ago, and we're in the process of making another disbursement of funding in YC. We also have a second fund called the Oppenheimer Fund, and it's specialized in the DoD type companies for defense type industries. And I think we just deployed a few million in there and a couple million left there. I focus on things that improve the human condition, things that are B2B, enterprise class type companies, mostly focus on medium, large, and global type business process improvements across the spectrum of the enterprise. My story is I worked with Cisco. We were buying a company every 2 weeks and digesting them back in the days. Then I went to work for a startup, and I spent a year in India. God bless you, people of India. You have got a great country. And did some operations there. We exited, started do venture business, and took a couple of assignments with other. So you may have sympathy for them. I have understanding, but no sympathy. You're doing this on your own. Nobody told you to do it. So there you go. If it's hard, you ask for it. today is not any more or less important than any other day in your life, but it's the one day you could make a difference for the next 2 hours. So make sure it does make a difference. Network, talk to people here, make the next 2 hours matter for the rest of your life if you can.
And Jordan, just in terms of stage, check size, you go in early as well as later stage?
We Series A and Pre-A, 150,000 to 500,000. We invest at the tail end of good people, like those VCs. Once they are vetted the company and done the work, we come in at the tail end of the cycle, and we deploy cash 2 or 3 times a month. So we're pretty busy.
Excellent. Thank you. So next up is Ekta Dang, who's the CEO and co-founder of UFirst Capital.
Hi, everybody. Like Roger said, I'm CEO of UFirst Capital. We invest across stages, from seed to late stage, growth stage companies as well. All in enterprise tech. I was investing through Inter Corporation's venture arm prior to us launching our fund, UFirst Capital, in 2019. And since then, we've made 42 investments so far and deployed over 90 million in capital across those companies. And the typical check size is from 2 to 5 million.
Excellent. Thank you. So next up is Ephraim Lindenbaum, who's the managing director of Advanced Ventures.
Yeah, thank you so much, Roger. So my name is Ephraim Lindenbaum. I'm a recovering entrepreneur. So I started the first half of my career, well, probably the first third of my career now, as an entrepreneur. So I've sat on your side of the table. I know what it's like. As Jordan said, listen up. It'll be a good program. In terms of Advanced Ventures, we were founded in 1999, which means we're either really good at what we do or gluttons for punishment, because we've now been around about 27 years. We've invested through 4 successive funds. We have several hundred portfolio companies. Our typical check size is 1 to 3 million, late seed, Series A, in syndicate. We broadly invest across technology, health, and wellness, which means we're a little eclectic these days, but we're really focused in on digital health. We do a fair amount of ag and food investing, and the occasional fintech or enterprise deal when one of my friends brings it to the table. So there you go.
How do we get to you to apply? What up? Suze.
Thank you. Well, so I always like to say the best way to get to us is through a trusted advisor. In this case, Roger's your person. So if you haven't signed up with Roger, have you, go to him, because in our case, we always go through either other VCs or through networked friends, because at the end of the day, if Roger sends us a bad deal, we're never going to come back and do this again. He always sends you good deals, so if you can get on board with him, it's excellent. Also, mostly our deal flow comes from other VCs at this point. You can also apply on our website. There's a little contact form there. That's probably the best. If you want to get through it, everyone will be reviewed. We have an awesome associate and analyst team. They will vet everything, and ideally, we'll meet again on a Zoom one day.
I'm so glad you said that, because clients sometimes get upset. They say, well, why won't you send us to Frank or to Andreessen or whatever? I say, look, my reputation's on the line, right? My credibility. And if I don't think it's a good fit, if I don't think it's right, they're not going to listen to me the next time I say that. So thank you for saying that.
Yeah, and if you don't, they should be improving their deck.
Well, next up is Mala Ramakrishnan, founder and managing partner of Progressive Ventures, and you've got a fascinating background. Please tell us.
Thank you. Yes. We invest in seed stage companies, B2B, AI first SaaS companies. I like women founders. It's not a requirement, but certainly that's one of the reasons why I'm doing what I am. My background, I'm a Stanford grad. I've started 3 product companies and successfully sold all 3 of them. My first one was when I was 21 years old as a graduate student at Stanford. And my last one, I just exited in December of last year. So I'm a very fresh operator. Thank you. I'm still standing and I'm still having withdrawal symptoms because I don't have an engineering team to manage. Our fund is 10 million in size, and we write checks which are 50 to 250K. I prefer accelerator-backed companies, especially StartX kind of companies where They are not. We don't have equity in the. We haven't stolen equity yet from the founder. We do run an accelerator as well, which is we don't take equity from you, and we're just supporting you to start your company so that I can get a closer look at you before I write my check. Honestly, it's what's going on.
Does the accelerator have a particular focus? Is it AI focused?
So it is, yeah. So we are three of us, all hardcore operators running the fund, and we're all AI engineers. I used to teach artificial intelligence at Stanford University in 1999. I've shipped 6 AI B2B SaaS products myself. I've shipped to more than 3,000 enterprise customers. I took AT&T live in October of last year. So I know what takes to do product sales. I know what it takes to build product, but I'm still learning from the likes of him on, showing IRR.
I'm tired just hearing your story.
She's saying you're old, Ephraim. She's saying you're very old.
I think Marla said her first company with CTO 22.
I was. So, you sure I'm not taking too much space? You have to drag me down. I can go on.
Yeah.
So, I came with a $50,000 student loan into the country from India. That's what the exchange rate looked like then. It still probably is that way even now, right? And 9 months in, I made a couple of friends, very entrepreneurial, born and raised in the United States, California. And we wrote a business plan that won first place, $50,000 cash. And someone called a venture capitalist, gave me that check. And I was like, oh my gosh, this must be the most powerful person on the planet. That is Guy Kawasaki. He helped us raise $1 million very shortly, like a few weeks after. We rented office space in Mountain View, and that's how Aeroprice was born. I was a co-founder and head of engineering, CTO. Was just telling them that the product would actually go on Motorola handhelds. It would tell you the shortest path to take as an IT technician. So think Geek Squad. Geek Squad's founder is my mentor. Right? So that's basically the product. And we sold it to 11 enterprise customers, exited by sale to BMC. And I come from a background where none of the women were allowed to go to college or even work. So my mom went on a hunger strike for a week to go to college. Even today, it's like that in many parts of India. And here I was at Stanford with $1 million. I thought I was the richest person on the planet and able to start a company. And here I am in my 40s, 3-time startup founder. That happens only when someone gives you a check and says, you can do it too. And so I thought the biggest impact I can have in my lifetime is do what men have done for me, honestly. Guy Kawasaki, the CTO of Dish Networks, gave me my third company. Raghu Madhabushi was the venture capitalist who gave me my second check to start my second company. It was a man who backed me up. I always team well with male co-founders. And AT&T was sold thanks to my co-founder, who was a man as well, right? He was a salesperson who actually made the deal happen. So I team well with men. I believe in men, but I think women need to be given a chance and an opportunity. And that starts with me. Unless I step up, I don't think it's going to happen. And I want to see a woman go IPO on Wall Street every single year. When a woman goes to college, the birth weight of her infant goes up. The baby she's not met. So just imagine if your mother had gone IPO on Wall Street. I think we'd have a very different president today. And that's the reason why I'm doing what I am. I need to see women empowered because we are the ones who think about the children. Like when Rob kept messaging me, I was like, what about the kids? Will my husband be home to come and speak at this event tonight? We are the people who need to be in the seat of power. When we think about the children first and we are empathetic and we have connections, we need to be on every boat seat. We need to be 50% of every room. And that's what I'm going to make happen as long as I'm alive on this planet.
Excellent. Thank you. So we've got, such a diverse background, but a lot of operators. And I'll just throw this open to the panel. How's your perspective as a former operator, founder, or technologist shaped how you evaluate, founders in startups?
Yeah, I mean, that I think is the most important thing in our industry, right? Which is how we interact with our founders, how we determine whether they're going to be good stewards of our capital that we're going to invest. In fact, we have a little model we use for that. We call it our 5-pillar strategy that we use as we look at companies and look at founders in particular. And they start like this. The first is authenticity. And we feel that's the number one factor a founder must have. And then we move on to honesty, because being, your level of honesty first with us as investors, with customers, with your teams, etc., are all mission critical to your success. Then we talk about conviction. That's you pulling this thing up by your bootstraps, getting to the top of the hill. You're never going to have as much money as any enterprise company. You may not have as much money as the startup next door, but you still need to do it. And we want to see that level of conviction. Next is transparency. And that's critical in dealing with investors, in dealing with your board, for example, which is really your your sort of, that we call it, your God is your board. And then beyond that's tenacity. So that means that you've got the ability, no matter if the market shifts, if your product doesn't work, if your customers are telling you something different, that you could adapt to that very quickly. So top-down authenticity, got to be who you are. Honesty, never lie to us. That's really important. Next one, conviction. You're going to do this and you're going to die trying. Transparency, you'll always be honest. You're not going to lie to us about numbers. You're not going to really kind of hide anything. And the last is tenacity. You're going to keep doing this no matter what happens.
So obviously, you've had this operational background, so you can relate. Going from dean to startup founder, do you feel that it's almost a necessity or a requirement to have had that operational experience to be a really great, very early stage investor in companies?
I don't think it's a necessity. As I've said, VCs come with very different backgrounds. And the good thing is it is a team sport. So for example, in my fund, I'm the operator and my colleague, a partner in the fund, has a completely different corporate VC sort of a background. I think what an operator brings, as Ephraim has said so well, among other things, is a sort of a different sort of a perception of when you folks pitch to us, we hear things a little differently. And we also understand, perhaps from our experiences, perhaps from what we hear from you, that there's a lot that goes into this story. There's going to be a lot more in this story, in this journey of yours, than you yourself are aware. We know to some extent that some of our experiences are reflected in how we look at whether you can handle that journey with these marvelous list of characteristics that he's laid out for you. I kind of tried to add one thing to them, which is all of those are excellent, but you have to remember that this is a long game. It isn't happening in, I wish it would. I really wish don't you wish all our investments would exit in 2 years? Would we be lucky? But it can take 5 years, 10 years.
None of us would be here.
Yeah.
We'd all be like,
So it's a marathon, not a sprint.
You were talking about characteristics of founders, and we're going to get to what's hard. But since you brought it up, are there, Jordan, Mala, are there important characteristics that you look for in founders that you identified in yourselves as successful entrepreneurs or successful CVCs that you really look for in entrepreneurs?
Yeah, I can go. I look for customer traction and how customer centric are they? Do they actually know their customer? Because I invest in B2B, right? It's not user behaviors or.
I was thinking more from a characteristic standpoint because Brian was saying the authenticity,
Yeah, well, I
great-
think those are all great, right? And those are expected. And I think I would memorize that perhaps. It's an awesome set of values that any of us need to have. I'm looking more to see if the person's a good team player. Are they being honest enough to be able to create a team that rallies around them, and how long have they had that team? And what did they do before this? Did they continue to survive in multiple team settings? I think it's a team sport, starting a company. You have to sell to first your co-founder, and then your people are going to work for you, and then your investors, and then your customers. So that's basically what I look for. Do they have the domain expertise? Do they have the fit for that particular domain? Do they have the experience? Like, we invested in a company that builds software for ambulance companies, and the founder has actually worked in ambulance companies. And so we dug down and found out how much has he actually done, right? And we saw, well, Kleiner Perkins has invested. So those are sorts of things I'm looking. Who's the other lead investor, right? Yeah.
So do you meet the team and have an opportunity to really interact with them and see how they interact with each other before you invest?
We invest only in Silicon Valley companies. What that basically means is at least one founder of the Bay Area. I've lived in the Valley of all my adult life, 25 years, longer than India. And so I do sneaky background checks through people that I know.
Yeah,
Yeah,
George,
it's money.
what do you look for in entrepreneurs?
The model for me has shifted. 5-6 years ago, the younger, more aggressive, more hungry, more creative ones were favored. Now they're out of favor. There's millions of seasoned 10, 12 years experience in many roles. And so the experience has leveled the playing field between this Stanford guy or gal.
Yeah.
I said gal. I'm aging myself. Do you take Berkeley people?
What?
Do you accept Berkeley accelerators, or are they out of favor for you?
Do I accept what? Sorry.
Berkeley.
Sky.
Yeah, we do Skydeck, YC, StarTex. YC is too
You
expensive.
traitor, you.
7.5% they've sold.
All
it.
right. So
But yeah.
the experience, the many years of experience, but because I've been in the back room with many founders, ran 2 companies as a COO and was in the middle of 3 or 4 others, I've seen the worst CEOs in the world because the lack of leadership is fundamental to your failure. You are the one and the only one in a team of 10 or 12 people at this early stage. And if you're not a good leader, if you don't know how to manage and inspire and you're out.
What do you think the most important characteristic is of a good leader?
There's a billion books on that.
For you, as you evaluate the CEO, is there something that you look for when you see that quality? It sort of just grabs you, or is it just sort of the whole picture?
It's a whole picture. Yeah,
Oh,
it's situational. It's the whole picture. But the more important one is if you treat your people with respect and dignity, they will die for you. But if you think you are something different than them, you're done.
Okay, it's kind of difficult to wait for people to die. So when I look for the one thing I do look for, and it's just a proxy. You have to remember that in this 10-minute pitch or 30-minute pitch, we're looking for proxies. And I would admit that I look for an ability to be convincing, kind of a salesmanship without being a bullshitter. And it's a fine line. You have to be confident, but don't lie, don't bullshit. I mean, there's optimism and there's BS, so kind of in the middle of that. Because a CEO's job is selling. You're selling to your investors, you're selling to your clients, you're selling to customers, you're selling.
To your team.
To your team. Exactly. Thank you for that. You're inspiring other people to join. So if you don't project that confidence, that charisma.
Yeah, I have a great one.
I do too. I think storytelling
Yeah.
is so.
Thank you.
When I invest, if the individual isn't a great storyteller, I have no confidence they're going to be able to get people to quit great paying jobs, come in and work for sweat, or to sell, or to give a great pitch. So I think storytelling is such
But to add to it, you're not going to tell this in 3, 5, or 10 or 20-minute pitch. That's not going to happen. That's not what I'm looking for. I'm looking for beyond the first, second, and third meeting is where I start to see these traits about the person. Sorry about that.
No, it's okay. We, as always, we have a shtick for this. We actually call it the Joan of Arc or Moses factor that we look for in our CEOs. And if you know the story of Joan of Arc or the story of Moses, those people got everybody else to do things they didn't think they could do. Joan of Arc got them to march into a 10x greater amount of people in military and succeed. Moses got them to all walk into the water up to their heads before the sea parted, right? It's you getting your team to do things they don't even believe they could do on their own. So I agree with all my colleagues. In fact, rolling it up into that, how do you do it? You have to have that, again, tenacity to convince everybody else around you and your team, most importantly, to do things they didn't think they could do.
So on the flip side, are there any characteristics that absolutely turn you off and just would make you run away from that investor? Besides, just not having the leadership, qualities. Anything that
Well,
is a
I'm
red flag?
very picky. You need to show up on time. You need to have your deck
Yeah.
together,
Professionalism.
right? I try to put them on
Thank you.
stage and see how they pitched in front of a forum. So we go and get like Google or someone to sponsor us just to do these events where we put our prospective investments on stage just to see how do they show up. Are they well dressed? Do they respond to questions properly? How do they interact with us when they see us? Do they have their act together, right? And because that's how they can interact with their customers and employees, and that's the culture of the organization. Are they good in the way they respond? Are they rude? Can I understand them when they speak? Because for 10 years, I'm going to be speaking to you. Hopefully, you exit earlier, but right? So those are the things I'm looking for.
I like to take the companies before I invest. I like to take the team out for lunch and see how they interact with the servers. You know,
Nice.
sometimes that's really telling.
Not being ready.
Huh?
Not being ready is a definite no-go. Even if you had a bad day, if you're having a meeting with an investor, first, second, or third meeting, being unprepared. And I know you heard this a million times. You need to have to know your numbers. You need to know, yes, you do. You need to know your numbers. Even if you had 10 CFOs, you are driving this business. And if you don't know what one single thing is going to do to your numbers, then you're not in touch. If you're not ready, please don't come. Cancel. It's better to cancel than not to be ready, because when you're not ready and you show up, it's dead. You're done. But if you're ready, you're going to rock it and you're going to make a great impression and you get a second meeting.
I really like to double click on what he said. You know, sometimes you think you bring in your CFO, you bring in your CTO, and then as a CEO, I think if you're the CEO of the company, you have to know every bit of it. I mean, of course, if there's a deep dive later on, bring in your CTO or CFO. But at that point, you have to know your numbers, you have to know your technology, you have to know the market.
Why do they have to know their numbers?
They have to know the numbers because they're the leader. Remember, you said they have to be leaders and they have to guide the ship along. Imagine if the captain of the ship couldn't read the compass or the navigational charts or whatever it is that they do. I don't know. Maybe AI is
we
good
ask
for
the
that.
same question in different ways and see if they say the same thing, just to see, you know, is it consistently the same truth? When you're reading the compass, for example. And I think
There are a few bosses, and we all know that knowledge is a commodity given where we can find knowledge. So if you're coming and telling us that you're walking in a white space and you're really the Moses, and we are able to go to the knowledge databases and dig out that there are even 20 Moses around, then you're definitely not the path. You're not the ones creating the path. So please be wary of that. That gone are the days when you are the only source of knowledge. It is very easily accessible, even to middle schoolers now. Forget seasoned VCs.
yeah, I do other things too because I've been an operator as recent as December. I know enough engineers that I place in companies. I'm not a recruiter, but hey, if you're looking to hire, I know someone, and then I have insider information. So some of my biggest checks, that's basically what I've done. I have my VP of engineering working for the CEO there. And so that guy worked for me for 10 years. So I absolutely know if they have customers in production and what's going on before I go my check.
Yeah, I think, you know, just a lot of founders just have a weakness in terms of financial literacy. And, you know, a VC called me and said, I just want to let you know why we're not investing, because we asked the CEO about the model and about the particular cells. And they just said, great question. We'll get the person who prepared the model, you know, to give us the answer. We'll get back to you. Right. They just said, like I can't invest, right? If someone, I can't invest millions of dollars with someone that doesn't really understand the model. Because if you don't understand the model, how do you really run the business as CS? Yeah.
I want to share this secret. Okay, it's a secret.
Oh, it's on YouTube.
Dude, don't ruin my joke.
The YouTube.
Okay, let's
Okay.
hear the secret.
Here's the secret that everyone should know. When you guys come and pitch to VCs, you have to remember it's a business that will and should make money for us. So if you don't think of it as a business where there's dollar signs in this deck, then you're not ready.
Yeah, I mean, there's another piece, and you know, there's something called the internet out there that I encourage everybody to spend time on. You need to understand how we work in our economics, right? You often hear stories about all of us looking for 10x returns on our capital and everything else. It's really important to understand, to prove this point, we run a business, right? And in most cases, we're, in essence, you know, representing other people. We work for our LPs. They're our investors. The reason that we're asking for that 10x return is because 90% of the companies that we're going to invest in will fail. And that one remaining company needs to return all the money to pay back the 9 others that failed, and enough money for us to return capital to our LPs so that they will continue to invest with us. And maybe at the end of that day, there'll be a little check for us. So if you want to talk about who's the hardest working person in the room in a lot of cases, while it may sound like private jets and Ferraris, it's lots of late nights, reading financial documents, reading business plans, meeting with people. I always joke I meet 20 or 30 new friends every single day of my life, right? So it's important for you to get out there and pitch it, but listen to my colleagues, because if you take these things into account, it'll be a positive meeting, even if we don't invest, but it'll be a positive meeting and you'll learn from it.
Great. Well, let's just get back on topic. We took a little digression. Yeah, we got digression here. So the heading is, what's hot, what's not. I know, Ephraim, you're gonna throw the A bomb. So besides, we'll get to AI, but what else in your world are you seeing that's hot? And look, every company, I think for many years, has had some ML or DL component, right? So this is not.
We like the protein business. It's bigger than all of the above. The global protein business is $700 billion. Okay. And that means there could be cows, in our case, plant-based proteins. It is really a big business, right? Then we go down that stack, we get to things like healthcare, right? And most tariffs will not affect healthcare. So, we're really focused in kind of those areas. We spend a fair amount of our time also doing things that will further, ideally, the world. We do some sustainability, agriculture investing as well. But, there's AI in every little piece of that. In our food companies, they're using AI to determine what is optimal for consumers. They're using it to optimize their ingredients. They're using it to replace, less ideal ingredients, that's a nice way of saying something, with natural ingredients. So it's predominant. It's just like if we were having this conversation in 1999, right as we were going public, and the word web wasn't the first thing out of your mouth.
Can I put it in a request for a protein that actually tastes like sugar? I mean,
So protein-based sweeteners are the future. That's where you have sugars that make something sweet with zero glycemic index. That is like within the next 3 years.
What we're going to see a lot of is, everyone talks about AI in healthcare, but I think we're at this point where it's not just AI, but the convergence of AI and cybersecurity, particularly for medtech and devices. Because if you think about it, an insecure medtech device poses so many problems. Think about it. Your pacemaker has been corrupted. What next? So, yeah, I know. Bad. So when we evaluate companies that are now AI-enabled medtech devices, we look for AI native, cybersecurity native companies where it's not an afterthought that's just been bandaged in, but it's actually built in, baked into the system at the get-go.
Next, we were talking earlier about some of the opportunities in AI. Where do you see some of the big opportunities?
Yeah. So with the infrastructure layer now, given the LLMs and actually more so, even the open source LLMs is stemming out of the infrastructure layer, that area is pretty much frozen from our perspective, and we're really focusing now on the application side. And of course, the agents are dominating those applications. But then every enterprise is now worried about the shadow AI that is looming across in this mesh of agents. And that poses another problem in terms of governance. There is an interplay of agents required, and somebody has to have that overarching layer built that really provides that accountability and is able to report back to the governance governing organizations on what really is going around in the agentic mesh that most CEOs are managing or will have to manage much more in the future. So it will create new requirements around AI governance, and a lot more has to be understood on the cybersecurity side of it. There has to be a lot more, which in the cyber world, that has to be looked very different from what it has been looking like in the past.
Bala, did you have some?
Sure, yeah. So I look at it at three levels, right? Infrastructure, and then developer tools, and then application layer. Because I am a hardcore tech looking at B2B sector agnostic. I think infra plays really hard for very small, mom and pop kind of startup founders, especially first time founders. Developer tools, I have written one check. The person, two African American founders, interestingly, they had 54,000 users when they came to raise seed stage. And that was implication enough. A0dev, you should go and try it. If you go to a0.dev and you just write a natural language in English, saying build me a mobile app XYZ that manages my weight, it'll give you an iOS and Android app that you can publish to your App Store and Android Store within a few seconds. So that's kind of what I'm looking for if you're going to do developer tools, right? And today, developer tools, I know almost all the developer tools. So I know exactly what part of the life cycle of a developer or a product manager or a go-to-market person would use so that I can double down and know who the competitors are. And I will not write a check unless you have the traction needed to go fight against some of these bigger players, because Google and Amazon and all of them are coming after this. The third is the application level, where I am looking when you think of AI first, think of a law firm. Since we're in a law firm, right? They're paid by the hour. And what you would like to see in an AI first law firm is that when you want to file a lawsuit, let's say, you never get to interact with a human being. And AI comes and helps
Look at
you
Roger's face.
file a lawsuit. Right? Maybe you bring in the founders or something. That's your job, really. But the core work should be done by AI so that it's an outcome that you get at the end of it, whether you won the lawsuit or not. It's an outcome based monetization model. The monetization models, I'm expecting it to be changed because you went AI first. So if you're going to be billing by hour, that can't happen anymore because this thing just zipped through the whole thing for you. And you don't interact with human beings. Or in healthcare, right? It's an extreme case where, let's say, you need a surgery. You go in, there's no human being interacting with you. The whole thing is operated by machines. And you come out either healed or not. And that's outcome based. And of course, those are extreme cases, but those are the sorts of companies. Like I wrote a check in an AI SDR company, such a crowded space. But I knew what metrics to look for. And because I've trained enough SDRs that I saw the traction. It's phenomenal. And Axel led their own. And I'm hoping all of you would invest in it. They're an awesome company. And that's what I'm looking for, like complete automation so that there's no human interaction. That's AI first. Another one I wrote a check for is in real estate automation. 50 real estate companies in the United States use their product. And I swear, when you look at that founder, he looks like my son. He's so young. It's amazing what he's done. And then I use the product. I always use the product. I always understand the tech stack to know if this is actually reasonable. It sounds like a human being. And so it replaces the whole, entire huge part of the sales of a real estate business, which is why they're using it.
Yeah, I was going to say all of that makes a tremendous amount of sense. In fact, that just passed my, technology level like somewhere like 5 minutes ago. But the short version is solving real problems. This reminds me a lot about the mobile revolution, right? Where there was a question around 2010, which was, are you an app or are you a company? Right. And don't get caught up in that in the AI cycle, which is, just being AI for the purpose of it. I think solving problems are key. I'll give you a great example of one of our companies. One of the biggest problems out there is concussions. I don't know if anybody's had a concussion in this room, but it's a pretty big problem. Do you know what the state of an art for diagnosing a concussion at point of care is? A flashlight and looking at someone's pupils. That'd be like going to a giant corporation and encouraging them to embrace an abacus as their new ERP product, okay? That's how bad it is. So we've got a company that is essentially taking dry sensors, which is a huge improvement. Right now, if you go to the hospital, they'll put little things all over your head. They have to glue them down, and then they'll take your brain waves, and then a neurologist will come in and they'll sort through a long paper trail, or they'll send you to a very expensive CT scan to see it. Well, these guys have developed a way using AI and some hardware technology that you can just put this cap on, and 5 minutes later, you've got a readout on a mobile device. Their AI has identified all of the locations. At a point of care level, it'll say this person had a concussion and it's bad and they need to go to the hospital. They've had a concussion, they can rest here, or they haven't had a concussion, but they might have some other TBI or brain injury, right? So think about that. A mobile defibrillator 20 years ago was $50,000. Today you can buy one on Amazon for $1,500. So talk about how big the concussion market is. They estimate it could be up to $100 billion. They weren't sitting around building tech stacks. This was an academic that saw a massive problem. He happens to be in the neurospace, and that AI would solve the one piece, which is the time it took to take all that data and sort through a tremendous amount of data to get to one little question, which is red, green, yellow. This person needs to go to the hospital. This person needs to sit down, or you can put them back in the game.
Okay, so yeah, great. Thank you for that. Is there anything that founders think is really hot, but it actually isn't?
B2C AI. Not gonna happen.
CPG dead?
AI applications, is it an application or is it we're going through the same company, or is this AI is trying to solve consumer levels, single tiny levels? That's gonna last for a couple of weeks and then be gone.
There are founders who are actually have created an agentic AI platform. They will find a particular niche area in, let's say, in the pharmaceutical industry, and it starts resonating, which is great. But then, does it have a path to scale? Does your company have the DNA to understand the knowledge base that your AI agent is tackling? So there needs to be a self-awareness. If you're not in the infrastructure layer, if you're not in the cybersecurity space, and you're entering verticals using agentic AI, then you need to self-examine yourself and see what do you need in your team as expertise, bring them in, and then go for that vertical and scale in that direction. Not just, I've built an agentic AI platform, starts resonating with one industry. There's no promise that it's going to scale in that.
There was actually an article about this.
Obsoleted by next.
Yeah, there was an
Yes,
article about
absolutely.
this just recently. 2 or 3 engineers get together, develop an agent. It gets huge traction, and people start flocking to it because they think it's another open AI. But really, they don't have the fundamentals of a real business, and it can be almost fad-like. I've seen these companies where literally 2 or 3 engineers get this massive adoption, but you kind of just wonder, when the next best thing comes along, are they just going to be wiped out?
You see, there's two things I look for, right? One is if you turned off your LLM, do you still bring value to your customer, and what is that value? That's the difference, the delta, right? Because I think AI is like spreadsheets today. You better have AI. But if you turn it off, do you still have something? Do you have data access, go-to-market strategies, some unique thing that you're doing in this world because of which you need to exist? The second thing I look for is gross margin numbers, because a lot of founders start companies with credits, OpenAI credits, AWS credits. You're making a lot of money, and then once you run out of credits, what happens? So what's your gross margin, honestly?
Better have money by that. I just want to focus on the other side, which is the customer that you're trying to appeal to. And for healthcare, I think what would be difficult to sell to us would be point solutions. Like, I have a conversational AI that can talk to receptionists so that you can talk to them and schedule your appointment. One solution, one use case. And it might be that you're starting out with that, then you better have a roadmap that you can convince us that that's in the process. So think very carefully about building a business around a point solution, because healthcare systems, they get flooded with these offers.
One thing I'd like to add is there are a lot of companies now coming to us and saying, well, our underlying infrastructure is this LLM. And there are only 3 players, 3 giants, actually. And actually, I did a blog post on LinkedIn as well on this. Just because there exists a Ferrari out there does not mean that you start using that Ferrari, because when you scale your business, it is going to eat into your capital expenses. And there are, coming out of RSA, which is one of the largest cybersecurity conferences held annually in the city in San Francisco, and hearing the keynote of Jitu Patel, who's a very senior exec at Cisco, they've now created a security specific LLM and are open sourcing it. And of course, with this open source, their projection of the new automobile, I'd like to say, that they've created. They're basically turning um, what everybody was, when everybody is using a Ferrari, they're actually creating a security wagon very tightly with all the bells and whistles that are necessary for that particular application that they're going after. So again, in short, if there exists a Ferrari, it doesn't mean that the Ferrari is really the best thing to use as infrastructure for your company.
Yeah, I've got so many more questions for you guys. Like time calls. Do you guys use any AI tools in evaluating potential investments?
Absolutely. Every
Which are the ones? Which are the ones that can you give away some of the secrets?
I use these Cell, I use HeyBoss, I use Claude. I use everything I can because then I'm learning the tools as well. I have an engineer in India who helps me as well because I'm doubling down on, can I automate my job?
So, what are the things that you're looking for? Inconsistencies, or what are you really?
No, I'm looking to do market analysis without me going and sitting on Perplexity and Google and all these places where it's automatically generating the the market size, the ICP, telling me all the customers, but also who are the other competitors, what's Amazon and Google doing in that space, right? And therefore, then also, what about the founders' background, which you can find online, and the co-founders? How long have they known each other? What's the history? Everything is available. Then you can actually have a deal memo that's generated with all of this information. Then I can sit and read. And of course, there are errors, and I'm like, okay, we need to go fix the product that I built. But
Yeah, we should tell them that we check everything. All those beautiful little pictures you have of the circles, we check everything.
We did a workshop yesterday, a full hour, literally online. And pictures are useless. Forget about pictures. If you want to pitch in person, pictures are great. If you want to turn it into somebody like us who's going to AI you to death, everything is analyzed, scrolled, LinkedIn is mined, market analysis is done. So reach out. There's some basic things you want to do to make sure you don't fall off. There's some fundamentals you have to have in your pitch deck or something like this. So when my AI goes through all the analysis, you don't come on the other side smelling like doo-doo because you forgot to do some basic things. But we are far more powerful in analyzing everything that you provide and then some. So, good luck.
Are there some issues that always pop out? I mean, besides the slide which says there's no competition, are there any real consistent things that pop out?
Roger, I'm going to be dead honest with you. Facts, details, specifics matter. 2 years ago, I just want pictures. Just show me the damn pictures. Let me understand. Now I don't care about pictures. And I don't even look at the damn thing. It goes through the tool, comes on the other side. If it has a high score, come on in. If it has a low score, thank you very much. And sometimes they just forget the fundamentals. How much are you raising? What are you raising against? Blah, blah.
How are you raising
Just
money?
cover all the basics initially and then level up.
So I know we have to wrap up. We've got that 1 minute warning like 5 times. Today was really quite amazing, and I say to my founders all the time, they should really pick their investors well. I think everybody here would be lucky to be invested in by you folks. But this client, we're raising $20 million. It's a $100 million valuation, and I hadn't heard of the VC. And so I said, so what diligence did you do in the VC? And they said, well, what do you mean? I said, do you know anything about the venture partner? Do you know anything? I mean, why this VC? They were, well, they were introduced to us. And what are the most important questions that these entrepreneurs should ask about their VCs? What diligence should they be doing? And what are the most important things that they should find out about their investees?
I think you should ask, which of your companies can we talk to? Or at least look them up. All the VCs have their companies listed. You should always talk to someone that they've invested in and ask questions.
What are the hard questions or the questions they should be asking?
I'm not going to tell them.
I'm not sure.
Well, I mean, I think, you want to know, as an entrepreneur, I think you want to know, is this an investor that micromanages? Or is this an investor that's there to support, guide, and really provide that insight at the board meetings.
Okay.
Is it
You got to listen to the stories. No one's going to say, yeah, I'm a micromanager.
no, but you,
Like,
you
I'm
find
really
that out from
nasty
the
on
portfolio
boards.
companies. You find that out from the
Well,
portfolio
I'll tell
companies.
you the thing that I used to ask when I went and raised, right? Which is what I think my founders should ask as well. I usually ask, how often do you expect to hear from me? And how much information would you like to hear? And if they are like, I really want like a weekly report, monthly report, I'm like, dude, I'm not your cup of tea. Usually a quarterly cadence, right? And what will your level of involvement be? Who are your connections? Can you introduce me to customers? And do you have a network of venture capitalists you could introduce me to? Right? If I'm looking to hire, can I come to you? I would ask all those questions. It's
But
the
they're all
team
going to say
member.
yes. No one's going to say no.
Oh,
I don't have a
I
network
see
at
them.
all.
I'm not going to do all of it for putting a $50,000 check,
Yeah.
right?
Access.
There are Sandhill Road VCs who have, the founders. We are investing in some of the founders who have received investment from the top Sandhill Road VCs, and they come to us and say that in the span of time, the way we have helped them and opened, accounts for them, made strategic introductions, clarified the lay of the land for their customers, none of the Sandhill Road VCs have done. They don't have the time, they don't have the focus, and they're not so vested as we are in their
Okay.
You're one of many.
Yeah, let me just tell you what the ideal cap table is going to be. Ideal. Okay. Yeah. Okay. So you want a couple of angels, because they care about you and all that. You want a couple of VCs who are kind of small, but will have enough time on their hands to take your call. When our CEOs call us, we take the calls. We don't have a monthly cadence. We just when they want us, they call us Saturday, Sunday, Monday night, evening. We're there. Okay. So you want a couple of VCs like that. And then you want a couple of those VCs, the Sandhill ones, who have deep pockets. They're only there because they have deep pockets, which means and a brand. Exactly. That brand will get you into the next conversation. The deep pockets will be your follow-on funding, because in a time like this, when it's really difficult to raise money from new sources, we won't name names, your Sandhill crowd will come through. You don't need to talk to them. They'll just come through with money. That's what you want. But we personally like strategics. I don't know what other people think about it, but we like strategics in the mix every now and then. So that's my ideal stack.
Actually, rounding it off on the question you asked, Roger, on what the founder should be looking at, I would encourage each one of our portfolio companies to go look at our LinkedIn, because that network does not lie, and that Rome can literally not be built in a day, in months, in years. It takes forever to build that network, and it's blood and sweat and tears and a lot of active engagement with the network that helps. So if you are targeting a certain sector and you know who your customers are, go look if your VC has ever connected with those customers. Are they hearing anything on the gaps in innovation of those customers?
Yeah. I think also,
And if those names are not there, then you have the answer right in front of you.
that's a great point. And just, one of the mistakes that I see a lot of my founders making, and look, in a tough funding environment, right, you get a term sheet, you really sometimes don't want to know the answer, right? And so you don't ask the question, which I really try to encourage all my founders to ask the questions. But I think so many of my founders don't, when they come back from the VC meeting, and I say, did you get a clear alignment on what's really important to you? Is the VC aligned with your mission? Do they have the same conviction? And so often, like that conversation just never really comes up. And I think where there's that misalignment of sort of the core ideals and values of a founder and an investor. If the founder's thinking they're going to take this and build it out for 10 years, and the investor's thinking this is a 3 to 5 year tops, company, that's a pretty important thing that you need to get aligned on.
Well, I sort of disagree with you.
That's okay. No, tell me, what do you disagree
just
on?
split your cap table into two parts. There's the ones that my esteemed colleague spoke of, and there's ones with money. And just take the money and go. And they make sure there's enough on your cap table to do everything she said. But it's okay to take money and not feel.
Board seat.
Yeah, but that's the issue,
That's
George.
that's a whole mix of parameters you have to think
Yeah, but
about.
that's the issue when you have preferred investors that have blocking rights, protective covenants. They have blocking rights at the board. They have blocking rights at the shareholder level. If there is a misalignment, I mean, I just disagree that you should take money just for the sake of taking money. I really think that it's important who you take money from, and not all money is equal. I think you folks sitting here like create some real value. You care, you create value, you create opportunities for the company, and that's really important.
It'll be very difficult not to take the money, though.
Sometimes you have
Not-
good VCs on, and then you have money VCs, and you go.
Well, when you can walk away from money, if your customers are paying you money, that's
You
when
know, then
I
you
walk
don't need
away.
the
My
money.
last
If you-
company, we got only customer checks. We were customer funded.
If you don't need the money that much, you got customers, revenues, maybe, yeah, you can walk away, but that would be an awesome problem to have. Like, I've got so much money coming here. What do I need your money for?
Although-
That's the best to do that.
Okay.
Yeah.
Okay, I'll just say one thing. Take a look at post by Scott Chisholm on Classy. He was a client, and there was a VC that was just not a good fit. We had basically 1 week of cash left, and he ripped up a $5 million term sheet, because he said, "I just cannot sell my soul, for this. I don't believe that this is the right fit." He ripped it up, and he said, and part of it was due to me, which I know.
happened?
So
We need to make a movie about this, Roger. This is a great movie, Roger.
I had to get some angels together, but they got funded by incredible VCs. They got acquired by GoFundMe in a huge exit.
Cheers in the movie.
But if they had taken that investment, the outcome, I believe, would have been completely different. But anyway, sorry.
The end.
The end.
All right, well,
Thank you, everybody. I appreciate your
we'll for our panel.
participation.
So panel, you exceeded expectations. You exceeded the time limit, but that's the moderator's fault, as usual. How can audience members contact you if you want to be contacted? Mala,
How
how can you be contacted by the audience? Do you want to be
The
contacted?
best way to contact me is to go through somebody I know. Go to LinkedIn and see who knows me that knows you and come through that. Or at least just message me on LinkedIn.
F.
Yeah, I agree. I mean, trusted advisors are number one. Submitting directly through our website is certainly okay. We do have talented people that will review your deck, but if you want to, have a meeting with me, you better go through Roger or Rob or one of these other great colleagues on the panel.
Yeah, same. I'd say, trusted advisors, as well as I'm active on LinkedIn as well, so you can reach out to me on LinkedIn.
I come from a third world country, and you could get nothing done unless you knew someone who knew someone who knew someone. That is bullshit. Pure, unadulterated bullshit. Come to us. If you're a fit, we'll take your call. If you're not a fit, we'll say, thank you, you're not a fit, and move on. If you have somebody to introduce you, more power to you, but just come on over.
All of the above.
Roger, you want to be contacted?
Sure. So, Wilmer, on the website, on the round report.
Well,
I got that.
Roger will be contacting you anyway, so it's okay. If you want to contact me, talk to Nikki, my agent. Email only. So now it's time for audience participation. So if you have a question for our panel, step right up. We're going to have a line here. We have roughly 30 minutes of Q&A. This is not a pitch event, so please do not deliver a pitch. If you deliver a pitch or a thinly disguised pitch, you will have to deal with Melissa, our bouncer. First question, Bert Wonk.
Thanks, Rob. I have been always advised not to pitch what we're doing, so that's stealth. That's a one-on-one meeting with you. But in order to get a one-on-one meeting with me, tell me, what is your absolute superpower value add that you bring to the table that my current investors can't? I
What
wouldn't
do you
return
bring
what
to the
is
table
your-
that other investors can't?
I wouldn't return his call, nor would I even answer your question.
That's okay. A network that has been harnessed over a period of 23 years, literally day by day by day. And if you find your customers there, we are a fit. If you don't find your customers there, we are absolutely not a fit. For example, you won't find me, in my network on LinkedIn. I'm not connected to the pharmaceutical industry. So very clearly you will see the patterns. There's no life science representation.
No superpower, man. I'm just an average human. I just do stuff. I don't have superpowers.
Yeah, same as him.
Well, we can definitely help you with your AI tech, right? But it's not something I would offer as a service just because I invested in you. It would probably be an advice that I could give you when we get the time, because I write pretty small checks in exchange for that. If I'm going to also invest all my time, there's not much left of me. And so I would fall in that bucket of don't look at me as a superpower, but always happy to support you because I invested in you.
I think one of the problems that I see a lot of entrepreneurs making is that they spend so much time fundraising with the wrong prospects and not really understanding who they're targeting, why they're targeting them. If you're targeting, a $300,000 check, Andreessen Horowitz is not the right, fit for you. If you're looking for 10 million, probably this group is not the right fit for you. So
See, that's
when you
very different than being asked, what's your superpower? And that's what I would look for, what he's saying.
And I'm going to add humility to my little list of
Yeah, I think that's a really good point. But when you go out to investors, you should know everything about the firm, know about the venture partner that you're going to be talking to, and knowing whether or not there are any competitors that they've invested in. Because very often, most investors won't invest, in more than one company in a space. So you can spend your time spinning your wheels, and you're really squandering your most valuable asset.
Thank you, all of you. I have a question that you can either help me with or dispel my impression. I have heard time and again that the first-time entrepreneurs, especially if they are north of 40 years age, don't get funding, don't get, basically they don't get funded, especially if you're 50 plus like I am, and I'm not an entrepreneur. But if I were to try, I would probably be just thrown out. I mean, very politely, but not gonna get what I'm looking for. Could you
Not
please
true.
either dispel that or, say if that why it is the case?
It's not true.
It's not true. We just get a 58-year-old founder's deal.
If you listen to Sam Altman, he says we will see a huge lot of 1 to 5 people team becoming unicorns, actually. Running startups that will become
See, the thing that I look for when I speak to an older founder, I'm older, I'm old, okay? The thing that I look for is how young are they in the way they think and about how up-to-date they are on technology. And along with that, if you have the muscle of experience, then it's unparalleled, right? I'm not looking at you thinking, how old is this guy? I'm looking to see, are you up to date on everything you need to know in order to run your business? Because it's just moving at such a fast velocity. Are you able to keep up? And I think it is harder as we get older because we have more responsibilities. We have children who are going to college, all these things happening. So you're not able to read everything that you can and play with tools. So that's the only concern I'd have.
It's not a straight 1 + 1 = 2. It's situational. Is the age a problem? No, it's not. If you're 22 years old, you're less likely to get funded by me because you have very little life experiences. If you're 40, definitely work at least 15, 16 years and you know something or two. But then it's a fit about what you're doing and who's around you. But the age is not the thing at all. There's nothing with age that says, because you're this age. A first-time founder at 40 or 50, more power to you. Why not? This is 2025.
So we have a thesis on this, which is we kind of break startups into 2 different buckets: brave new world or better, faster, cheaper, right? And I think, to my colleague's point, oftentimes younger founders, even in university, I was a very young founder, we're fearless. We don't know any better. The risks, you have nothing else in your mind, zero. You're like, it's zero and this, right? When you're an older founder, you have a lot more. So there's a lot more experience. What we found over the course of 25 years is, older founders tend to be better at the better, faster, cheaper side of the business versus the brave new world, unless you're an academic, in which all bets are off. So I think you have to be able to make your case along the lines that you're at. If you're coming in with, some very audacious new idea, then, you're going to get some skepticism from us, right? If you're coming in and saying, I've been in cybersecurity for 25 years, I found a hole in the side of the boat, and I know how to patch it, we'll take your call and we'll fund you.
Traction.
We are investors in a company started by the ex-chief development officer of Cisco, at least 15 years older than me.
30?
Yeah, so you're close. And he's tackling the team is tackling a brave new world.
And I just want to add one more thing, okay? Put yourself in our shoes. When you're looking at a startup, the highest cost is payroll. When you're in your 40s and 50s, you need a $300,000 check to live in the Bay Area. And you're going to be very expensive.
Not necessarily, no.
So maybe you're moving out of Palo Alto. I'm not moving out of Palo Alto, but where you live. Those are the things. Are you willing to compromise on money because you made your money, right? Those are some things that you have to consider. I land up paying my employees more than myself when I'm a founder. And that's not something that happens often with all founders who get older. And therefore, it distills it. It becomes more like a large organization where the payroll is just unfairly skewed, and that's what I've seen. So then you better go land like a Dish Networks and AT&T, which is what I did, to be able to sustain everybody's livelihood, right?
I found the more seasoned founder to be more realistic about pays and money, and they're not necessarily looking for a big paycheck. Most of them are financially better off, and a lot of them understand that this isn't about the $300,000-$400,000 check. It's about something well above and beyond. But it's like I said, situational.
Depends. Yeah, that's exactly that's the characteristic we're looking for, right? Are you in it just to get the CEO title and thinking that you're going to do the same level? Especially, you're not a seasoned founder if it's your first company and you're in your 50s. So
like everything else, you can't generalize because it all depends upon the sector, the industry. If you were in pharma, if you were an academic coming out of this Nobel Prize winning lab, then that's very different. So if you feel like you're getting rejections, it's probably not because of your age or the fact that you don't have a previous startup. It could be something else. So I would look at that last.
Wait, hang on real quick. Let me add one other thing. Older founders tend to overthink the pitches to us much more deeply because your level of responsibility in life, to the earlier point, is very high. So we found that founders over, roundly, we're just going to call it somewhere in the 30s, tend to think a lot deeper. They tend to second guess. They tend to try and plug every hole, where younger founders are operating in a much more seat of their pants way. In a lot of cases, it serves them better because they gave you less information because they had less information, but it was 100% true and correct. It wasn't Uber filtered, and they were able to just really honestly deliver you and very authentically deliver it. So go back to some of those data points I was mentioning. You've got to be authentic. You've got to be honest. Like, those things are a lot harder when there are a lot more pressures, to my colleague's point.
The short answer is no.
And traction cures all. So if you got traction, you can bootstrap and you get traction. That's great.
In healthcare, unless you go through some pains, arthritis, or better if you have a diabetes, then you understand the problem. The 25-year-old, what they know about healthcare, I come across all the times. They have no clue.
Take care of your grandma who died on you.
Technology alone is not enough.
Yeah.
You need to understand the day-to-day problems and what they go through. That's a fundamental requirement in my view. So
I don't agree with you, but that's a different conversation and a different day.
Is there a question? Yep.
Thank you. So I'm a successful entrepreneur on the food and coffee business, but I'm using a lot of AI and latest technologies in enhancing my sales and profitability. And I have a kind of a solution for how I can take it to the next level just for my cafe for multiple locations and then the franchisee. So we are talking technology, but I'm talking about conventional business. So are there any opportunities?
Can you repeat the question, Bach? I think he's asking a brick and mortar with an AI slant or technological slant. Is that
You should,
something?
here's the thing, right? Go and look up the GDP of the United States and see what percent of it comes from venture-backed businesses versus franchises, and what percent of employment comes from franchises versus venture-backed. You'll find that it's disproportionately high, that venture-backed businesses get you greater GDP, which is the reason why venture capitalists want to invest, because we'll see those returns. But we hire much lesser people. The franchising model is exactly the opposite of that, which is they hire a large number of less expensive workers, provide employment to a lot of people, but their returns are a very small fraction of the GDP. So I would never invest in a franchise as a venture capitalist. It would be against the model, you know?
Well, so that being said, all correct. There are VCs that invest in things like that. They invest in the core of the franchise model. We invest in the food business. We invest in food brands. So we would look at it. A good friend of mine that runs a fund started Veggie Grill. Okay, so that was a venture-backed franchise business that did very, very well. So, there is a lot of opportunity out there. I think you have to understand who you're going to what my colleagues have all said. Don't go to a healthcare VC with a franchise. Don't go to a cybersecurity VC.
Up to me.
Yeah, Mala's not in, but if your AI needs help, probably one of her companies can do it.
Yeah. I think also, when you think kind of like an investor, these folks probably have 20 decks every day that they're looking at that come across their desk. And I think every investor would love to have something that's infinitely scalable, which is why software is such an attractive investment. And so I've had a client in the franchising area, and what they did was they developed a tool that they could extract from that model to utilize and basically build a SaaS company, and not get the franchise model funded, but they got the tool model funded and became very successful at it. So, not every business is VC fundable. I know there are certain that do franchises, but not for the most part.
Yeah, so that's where I'm basically differentiating myself. I'm going to use this AI tools which I'm using at my cafe, but which will be scalable to all other SMBs, and that's where I want to.
Okay, so you're not selling the brick and mortar, you're selling the SaaS offering for other SMBs.
For the cafes or business.
Well, if you've got all the great KPIs, and you've got traction, you've got market fit, yeah, maybe that is something for you folks.
Thank you. This is very.
Hi, I'm Danny, one of the founders. It's very nice to participate in today's event. So one question would love to hear from all the panelist speakers is, can you share one startup examples that you have a very high expectation when you invest, but it turns out fail badly? And we'd love to know what is the key failure factors. So any stories that you have invested before, but does not turns out to a success.
We started my first company and it was a huge fail. I mean, we picked the wrong business. It just so happened we wanted to make music videos a long, long time ago when that was still cool. And it turned out that they're all made in LA and we were like 400 miles too far north, right? So we're like, oh gosh, what are we going to do? And our first client ended up being Apple and our second was Intel. And we helped them launch the Pentium 1, 2, and 3 processor. And so it's less about how you fail, but how you fail forward and how you're able to look at what's so much around you. You can look at, X, sans Twitter, and how that started and where it became, and so many others. So I think that the concept of failure is oftentimes when you lack the ability and tenacity to pivot, to find opportunities. Ideally, I think all of my colleagues here are so brilliant that they saw if you got a check from us, they saw something in you, your team, your tech that should have allowed you to find your way through the wilderness? If not, look inward.
There are a lot of startups actually which were following the automation route before the LLMs came into the world, and some had to revamp their websites to look like AI native companies, if you will, and it still did not work. So yes, we have seen failures where we were going after the early AI automation when the LLM hit, and what they were offering just became a very simple, you know, uh, thing that could be automation that could be very easily achieved by a simple prompt that could be given to the LLM.
On the flip side to that question, are there any opportunities that you passed on that became big hits? And what's one of them? And
Why make me relive such a horrible experience? I mean,
We went to grad school with Sergey Brin and Larry Page, the founders of Google. I had an offer to join as a software engineer, and I didn't take it.
You're better off here.
we saw Google, we saw Facebook, we saw all of the above. I mean, we've been around a long time. Often they were just too expensive, and we were going to have to take such a big bite out of what was $100 million fund in the 2005 or something. That were we going to bet 30% of the fund on this one deal? Now, had we done that, I would not be here today talking to you. But at the end of the day, it was one of those things, and you just can't do it. We also, brought a lot of founders that came from very, unique and disparate places to a great place in their lives. And I think for me, one of the greatest things is being invited to founders' weddings, their kids' births. I was just at a founder's daughter's wedding. Okay, this is someone that I'm 3 deals deep with. The daughter calls me uncle. Okay, and it was a gorgeous wedding. And at the end, I was just really happy. You're just happy for people, right? And he comes here at the end. He says, "Well, you paid for this." I'm like, "Well, how did I pay for this?" And he said, "Well, if you hadn't have funded me, that wouldn't be it." And I said, "No, no, no, no. You paid for it, and I got a little slice of your pie, buddy."
I was just going to say that what you might not see is that there are times when we can't get into the deal for many reasons, like Ephraim said. And then it's not because we passed on it, but we jolly well wanted to be on the deal, but things happen. And so it's a part of what we do, you move on. Yeah, you can have it all. You move on.
Oh, the reason why I asked about the failure is because I once talked with one of the VC investors. When he shared about one of his portfolio founders who failed, he cried, and I was shocked. He cried for 5 minutes. It's like,
I can tell
So-
you
so-
about my
so I
second
was like-
company that I sold, right? The reason why would you sell a company didn't go IPO? It's a failure in my people tell me I had 3 successful exits. I'm like, I had 3 failures. I didn't go IPO on any of them.
He's way better. No.
Well,
IPO's death of the thousand cuts.
But I'll tell you why I was crushed on the second one, right? I was trying to automate before LLMs a very specific part of financial processes, the procure to pay, the order to cash, and trying to build Lego blocks to automate it so that I can have a repeatable sales model. And the discovery I made is that the more customers I talked to, everyone was a snowflake. There wasn't a repeatable model that I could have. And no matter how many Lego blocks I built, I'm going to be having a services company to cater to it. And I think that's one of the biggest problems in B2B businesses. And when I look back in time, I worked at companies like Oracle and Viva and Tipco, and I've slowly realized that for every $1 of license sales, they were selling $3 of services. And so finding that commonality that you need in order to have a repeatable process is really hard to do as a founder because you have a small team, you have one customer, you can't see the ocean because you're looking at one fish. And so that's the problem, I think, why a lot of these B2B companies at least fail.
Yeah, and I would be cautious of any VC that cried when they talked about founders. I mean, what ideally they should have said was, I funded that person's next company. I found all the people that worked their jobs at my other portfolio or broader companies. So I think you've got to be overly cautious about, highly emotional people in any category. I mean, that's an important thing.
Hi, I'm a software engineer at a bank, and I deal with badly written software all day, every day. So my question is, how do you get people excited about products that are not generative AI based, that are just simple, good softwares, like maybe industry-specific ERP systems or platform businesses? How in this environment, how do you get people excited about that?
I always get excited when you come and tell me customer traction. I have tens and thousands of users using this on a daily basis and 50% conversion. I'm like, whoa, yes.
Yeah, I mean, I think that's the number one thing. The best endorsement any startup ever has is from their customer. The best call I ever make is when a customer says, you know, if you don't fund them and this thing crashes, I'm going to die. You know, if your customer says that for you to me, you're probably going to get it, you know, a better chance of a check.
Here's the thing, is it a vitamin or a painkiller? That's a very standard, very cliche question VCs would ask before they'd invest in gen.
It's I can't. It's like when the cloud came on and everything was on premise and was complicated, and the cloud came on. It was a fad for a few weeks, and then before you know it, it became a standard. So this AI isn't AI anymore. It's a standard. So can't do it.
I mean, if
It
companies
wasn't.
aren't using AI in some
Yeah.
way, shape, or form, are you?
No, it wasn't a flippant question. It was a serious question because of the affordances that are opening up every day. Have you evaluated why perhaps you could do this differently, better, faster, cheaper, etc., etc.? That's all. But don't have to answer the question. I'm sure it's a very well thought out strategy. It's fine.
No, I guess I'll tell you why my product, you could always turn off the Gen AI part. And the reason we did it is because you're shipping data from an AT&T to OpenAI. And they tell you zero retention policy, and you're going through it and all of the checks and balances, but you absolutely don't have any proof on what they're doing with your data, and therefore you want to turn it off. So if anything, I think you should be totally proud you can build a product that's viable and have awesome customer traction without generative AI. And I'd be interested to talk to you if you really have something like that.
Thank you. Excellent. Dana.
Hi, I want to follow up on something Preeta said earlier about strategics on the cap table. Can you talk a little bit about the role that strategics play, either as like fellow investors or as potential customers? Or how do you knit them into the ecosystem that you built?
Why do I like having strategics? Is that the sum of it all?
How like
How do strategics?
do you do anything to bring them in, or you just want to see your founders bring them in? How do you intentionally reach out?
Yes,
or engage
yes,
the
yes, and
strategics? What does
yes.
that look like? Yeah, great.
Founders, when they're doing their founder thing and they're pitching, quite often they pitch strategics. We have two strategics in two. I mean, we have a strategic in two of our deals, maybe another one, three, maybe four. And it's sort of a risk mitigation strategy in a way for us, because if you have a device and you have Johnson and Johnson in this thing, because they not only give you access to their data because they're now invested in you, we think it signals a very strong interest in an acquisition potential. And if they're nice people, which they typically are, we wouldn't invest with them, would we? They are super helpful in opening out the doors for other customers. And we've seen all of these things happen with with the two companies where we have a strategic on the board. So I'm a huge believer. May not work for anyone else, but we think, yeah, it's good.
It's a double-edged sword. I mean, it really is very sector specific. I totally agree with Preeta in healthcare, super helpful.
And they could be nasty.
Yeah, no, I believe me. I've got a company with 12 of the largest, out of the mags, other than Mag 7, these are largest companies in the world. Things like Tyson's Food and Bunge and even bigger ones like them, and at the end of the day, it's a double-edged sword. And I'm not a huge fan of CVCs on a cap table unless you really need them. Because the things I will tell you is the minute a CVC gets on a cap table, it's really hard to do. In other than a few categories. It's hard to do business with them. My experience is once they're on the cap table, it's so hard to get an actual commercial deal done with them, number one. Number two, if they're on your cap table, in most cases, they're never going to buy you. Both of which are bad outcomes.
You're killing me. You're killing me now.
Well, in healthcare, it's different. In healthcare, it's different because, it's a tuck-in acquisition, J&J, they got a hole somewhere. And it really depends on your CVC. I mean, if CVC is really the M&A side of your company, which was historically the role of a CVC, that's great. But now those are off-balance sheet, sub-balance sheet products. And, I'm not, they are venture tourism in a lot of cases. Just they say.
I think I agree with you. There are issues with CVCs, and if there are no financial investors in the deal, that's really tough because CVCs are driven typically by something more than just ROI. It's if you have to give an exclusive in terms of manufacturing, distribution, if the hooks are too deep, it could just make you unfundable from anyone else or unattractive to any other acquirer. So I think that's one thing. And clients that are really being successful with strategics, they'll bring in financial investors,
Right.
and then bring in strategics for validation,
Right.
and not just one strategic, so that it sort of shows that maybe someone owns you. But a company in the mobility space that did this very well. We did a financial round. We raised $85 million. We opened up a safe round for $20 million, and then because of their mobility, they wanted someone in agriculture. They wanted Airbus, they wanted Volvo, so they got a whole bunch of strategics for that validation. I think that's great, but there were very clear protective provisions for the company in terms of information rights, inspection rights, that were limited because we had financial investors.
Yeah, it kind of goes to the point which I said about how you build your cap table with a set of folks that address your company, the market you're playing in, and the customers you're seeking. But also that the other part about rights and all, that's what you're there for, right? You're the legal. You should be sitting there and looking at this and saying, you can't sign this.
But what's hard for a founder is when you've got the 800-pound gorilla wanting to invest, right? And they want it so bad, they can't. Yeah,
I'd say go for a CVC, but have a person like Roger negotiate your term sheet.
I don't know. He's
Don't
not
put it first. Don't put it first, but at the same time, you can write on them as a customer. The investment teams at the CVC are not investing for financial returns.
Yes.
They are being measured on the depth of the collaboration between the startup and the company. So that instead of a founder having to maneuver a big ocean, they are doing the groundwork for you to make sure the collaboration that you initially promised, which was initially promised, actually happens. And then they come with a huge partner ecosystem, which is impossible to penetrate through.
Yeah, there you go. So I don't know. Will you be able to stand up on behalf of your startup when they're negotiating with?
Absolutely. I think my job is to make the founder understand how that decision could make them unfundable or unattractive to any other acquirer. And I think just ROFR is the kiss of death. Like, I'm just going to say it. I don't know if anybody disagrees here. ROFR is a right of first refusal where the CVC says, oh, hey, listen, if you're ever going to go sell yourself, just give us a right of first refusal. Sounds innocuous. You go, yeah, okay.
Oh, the call option.
No one.
We call it the call option. And it was always in the third CVC meeting that the call option comes up, right?
The covenant?
Yeah. I mean, it's brilliant what people are saying because we have a later stage, and we have what they call the rule of threes. If you're going to take one CVC, you have to take three. Because the thing is, if you have two, they will collaborate against you. If you have three, they will fight each other for you. And that's our rule. If you have one, they will run you. Two, they will collaborate against you. And three, they will fight each other for you.
Just the reason that a ROFR is the kiss of death, if you can imagine you're like this major company and you want to get sold and you go talk to the competitor and just say, hey, look, we're going to negotiate for the next 3, 4, 5 months. And once we get to like the final best deal, hey, we just have to go back to that CVC. And if they don't want us, we'll come back to you. No one will talk to you. It is going to be a very chilling experience. I see we're standing. We're out of time, so
Well, let's deal with that for our panel. So now it's time for the raffle. So someone will get funded to the tune of $25. Preetha, would you like to do the honors? It's a $25 Visa card.
Yes. And the winner is Greg. Greg.
Greg, you sure that's Greg? It's Gregler. Well, come on down.
Hey, Greg, didn't you win last month, last event? I think this was rigged.
So I want you to get a picture with Melissa. So let's give it up for Roger, our awesome moderator. So let's give it up for Snell and Wilmer and all our sponsors. So let's give it up for our event team and our video team. Let's give it up for our audience for sticking around. Let's give it up for me. So normally I would say we have 3 options for the after party: the Rosewood, the patio, or Pizza My Heart. However, Snell and Wilmer has given us special permission to have our after party here. So we've got some ice cream, more watermelon, and we have live entertainment featuring Brian. So you want to introduce yourself, Brian?
Hi, I'm Brian Theory. I work at NASA, and I've come tonight to provide some entertainment for you. By the way, this is a picture of me playing guitar in space.
So thanks for coming. Enjoy the after party. We'll see you next time.
Hang on one sec, just one last thing.
All right, one last
I'd
thing.
like everybody to stand up so we can get a group selfie of, and you got to be in this, Rob.